Sweet. All right. Before I get started, right, today we had a really good day, and I wanted to go over profits and percents from this morning, right? Saul, 792, Scalper Don. This was his first day in the room. Got about a 20% win. Chef made 645. Donuts has been in this sweet spot, 40 to 60% typically. And a really good day in the room. We see all day people are making gains after I step away. So really good work today, guys. Good to see that. As well as the poll. The poll was pretty good today, right? 62 and 23. So moving through here, right? Tonight we will be covering, what exactly did I say? Let me go back. Tonight I will be covering, one second. A trade review, right? I want to be going over my NVIDIA trade as well as QQQ. Developing a strategy and edge, something that a lot of traders fail to look at when beginning to trade, right? They want to trade everyone else's kind of setup, but the only way that you'll improve and gain independence in trading is by developing your own edge and strategy. It's not working. Okay. As well as how to use EMAs and Trendlines together in tandem so that you can find yourself and an entry as well as hold on to your trades. Yep, that's my Discord. Thanks, Dowdy. As well as trading psychology, okay? Some things that I want you guys to be aware of going into tomorrow, since we did have somewhat of a very strong trend day in both directions. So going through here, I had NVIDIA this morning. Some of you guys hopefully were in the stream and watched us break this down this morning. But I had a few questions from some members talking about, why was I looking at NVIDIA and, what led me to stick to my kind of bearish sentiment here on NVIDIA, okay? So just to kind of overlay, I don't know why this is not letting me zoom in here. To do it. Okay. Huh. Alright, well, whatever. That's fine. This will work out for me just as good. Alright, so going through here. Why was I looking at NVIDIA? A lot of people were talking about, why not trade the top gainers, top losers, or constructing a watch list at night. And a lot of energy goes into that, and I do find benefit from that, but I do see where the cons are as well, right? Because sometimes you do all of this effort and then you create this kind of bias in your head depending upon what the chart may or may not do, and possibly you're putting in too much effort, whereas you could just focus on a handful of tickers and understand their personality and how to trade them day in, day out. So remember, I hope you guys are taking notes. The tickers that I do trade right here is this QQQ kind of summary, and not all of them, some more than others. And Walmart I threw in here. It's not part of QQQ, but I just like looking and trading at Walmart sometimes. So going through here, right, the main ones that I really trade or look at would be Apple, NVIDIA, AMD, QQQ, Facebook, and Microsoft. Okay, those are the main ones that I really look at. Why do I look at those? Those are simply they have good liquidity, good open interest, and the contract price most of the time is within a parameter that I enjoy trading. Like I'll trade anywhere from 30 cents all the way up to $4 sometimes a contract, right? But it's usually within that range, and I know which tickers to run to if I want to trade a smaller size contract or a larger size contract. So one thing that I really recommend is that you guys find a ticker that you want to start to trade or learn about every single day. If you guys looked at my recap from today, some of my main trades from today, we had QQQ. I took the 3.99 puts this morning from 98 cents all the way down to 5.42, or all the way up to 5.42. NVIDIA here, I took these 2.90 puts from $2.02 all the way up scaled all out at 943 for 366% gain. So that's a $700 a contract win. Nvidia, again, these 285s I laddered. This is from 151 all the way up to 350. And this one, since I laddered, I was holding on and just really wanted to manage my singular position, that main position, as well as another QQQ big winner, 177 to 394. So almost $200 a contract there for 122% win. And these were all, called out in the Twitch stream. Had you guys been on this morning, I was up, just slaying the Qs in Nvidia practically all day, as well as AMD. So going through, why would I be looking at Nvidia? One, it's a pretty strong holding in the QQQ summary, but the contracts are a little bit more. Okay, so normally I'm trading Nvidia contracts from $2 all the way up to $6 a contract, and when I'm watching Nvidia through the studying of the ticker, I have noticed that it likes to hold and maintain the EMA trend, which is one of my biggest kind of strategic edges when it comes to trading the market. But I also understand that this trend may not last forever and that I should bounce around and be open and act, that's why I have a handful of tickers that I trade. Yeah, these are large cap options. Okay, so I just want to go through here. How do you scan and find a ticker that holds its EMAs, or, makes trading a bit more simple? Even if I go here in the 1 minute, I know that typically Nvidia will follow its EMAs in a trend, okay, and not a range. When I say trend, it means a sharp movement to one side or the next, whether it be all day or a portion of the day. So going through here, we can see all day, or not all day, but about half of the day here on the 1 minute time frame, your smallest time frame, that the green line does not cross over the 20, the red line, okay? And this allows me to stay in. So I want to go through how you guys can find those, okay? I typically look on the 10-minute chart, okay? And let me extend the days out. Let's say 30 days. 20 days is fine. Okay, so remember, this is extended hours. This is during the live session, right, when we're trading. So we can see here on an uptrend, very sharp, strong movement, holding your EMAs. On the downtrend, same thing. All right, moving to the previous day, crosses to the downside, comes up, retests VWAP, holds the 9 and the 20 on a bearish kind of sentiment all the rest of the day. Okay, you can use that as your risk for if you're short. The following day, right, big spike up, you would have had to have used your smaller time frame, possibly the 1 minute, to grab an entry there. But had you waited to short this, when this crosses below, right, it's an easy, very simple trend that you adhere to, right? If I go here, let me just draw an arrow so I don't lose my spot. Let me go to the 3-minute chart. Arrow right there. Look at this 3-minute chart. Remember, you have to use your smaller time frames to get into the trade. But, right, normally the 9 EMA, between the area between the 9 EMA and the 20 is a prime area to add, okay? And most likely stopping out if either the price close over the 20 EMA in a strong succession, okay, not just one bar, but in a strong succession, as well as maybe bumping up and looking at your 5-minute EMA, but that would be the 9, right? Your 5-minute 9 EMA really kind of aligns with the 20-minute or with the 20 EMA on the 3-minute. But you can see here, right, multiple entries on each of these taps, okay? So this ticker has a personality, right? If you guys want to go through a few more days, right, this ticker has a personality, and it's something that you can really replicate, and I try to identify and find every single day. Okay, look at this downtrend day on the 10-minute. Very clean EMA. When you are reviewing, don't just review your trades, but find other vessels that you can trade that would allow you to, right, look at this day. Remember, not every day is going to be a trend day. I talked about that, and you must be able to identify when it is trending and when it is ranging, okay? And when it is ranging, we must be able to hold a small core and scalp around that core and not try to hold a large portion for the remainder of the day, right? There are certain days where it is like this, and that is just reflective of NASDAQ and the overall indexes. But see, most of the time we see a very strong trend at hand. So I want to go today to today's trend. Okay, we can see here on the 10-minute follows it very closely, but we want to zoom in. Okay, I like that 1 minute like we were looking at. And if I go here on my review from today, 1 second, let me open it up. Okay, so with those puts, I entered the 290 puts here, okay, right at about 9:46 or so, something around that time, okay. And if we go through and we delve through this chart, okay, not marking any kind of extra lines or anything like that, okay, but just, going through and charting it, okay. Obviously, you would mark a support there and maybe even, your resistance up there, that channel, okay, maybe marking the next pivot, right? Understanding that these pivots are very strong here. So you have a high, you have a low. Now you have a lower high, rejecting off the 1 minute 200 EMA. And for this to remain bullish, one, we need to spend time, much more time over VWAP, but also see our EMAs cross over. We need to see the 9 cross above the 20. And we need to see a higher low form, okay? So we come back down, a higher low forms, we maintain that. But we need to see a higher high, right? Price needs to be able to push above this level, maybe pull back down, and then break through the high of the day eventually, right? I'm not saying in one moment, but, through these successions in the range, okay? But when we do pop up here, we get a lower high again. So that's going to tell me that one, either buyers need to come in here very strongly and absorb this, or they're going to get taken out, okay? This is where I take my 290 puts there. I can pull up the options contract chart right next to it. Oh, Lord, what happened? Let me fix this. Okay, just pull it down here to trade. $290 put, send to, okay. So we're gonna go here. We'll look at this bottom portion right for the time being, but I enter my contract here at $2.02, the 290 puts. Okay, so right here around this arrow, this is 945 right here. Why do I enter this? Okay, because we want to short the potential lower highs. We're never shorting when it's shoving down like this. Okay, a lot of people tend to do that, and that's a mistake when you're making into your trading, and it can really form a very kind of detrimental habit when you are trading in the long run. Okay, having to shape your mindset to, instead of shorting on the downticks, shorting the upticks, right? And why would you do that, right? Because you're combating and taking away those sells from bulls. Now, I know that we're selling or we're buying puts here, so it's not really shorting the commons, but it adds to the strength of the move to the downside. So, you want to short the potential lower highs, right? So this pushes up, a short comes in, longs obviously want to lock in some profit and not be red. Same idea comes here. Also, it's a VWAP rejection, okay, taking into account our EMAs. We just rejected off the 200 EMA, as well as the 9 is below the 20 here. Okay, remember I said the range in between the 9 and the 20 is a prime area to add for a bearish kind of move. Okay, now moving through here as well, I want to pay very close attention to NASDAQ, NQ. A lot of people say, hey, why are you watching NQ every day? What's the significance? If you're not watching NQ and you're trading these tickers within the QQQ summary, you're just riding blind. Okay, you have to be able to have something like an index to watch, whether or not you're trading a ticker that's within the S&P 500 or whatever. Okay, so moving through here, remember taking into account reading what your indicators are saying. Okay, right before open, 925, we get a big shove down below the 200 EMA. Remember, these quick charts are on the 5 minute. You guys see this? Okay, it breaks below the 200 EMA and bases. You see this? It breaks below. Sellers come in and hold that. What are your EMAs telling you? Okay, VWAP just shoved and closed below the 200 EMA. Your 9 is well below your 20 and has been below your 20. And, price is well under this, all of these indicators here showing a very bearish trend. I mean, it's just, under the purple line, VWAP, bearish. Over the purple line, VWAP bullish, right? It's a very simple concept, okay? Always taking into account how much time is spent under these indicators, okay? And the relationship between price. So going through here, we can see that there's all of these levels. I need multiple levels of confirmation, okay? Now, this is how you build a strategy and you build an edge and more confidence in the market. Okay, this obviously is within the QQQ summary, which follows NASDAQ, so it's going to follow this price action very closely. Same thing, we break below the 200 EMA, the 9 is below the 20, signifying a bearish trend, and the amount of time spent under VWAP here, it's very large, rather than when we spend time over VWAP, it gets a very strong short reaction. Okay, sellers step in very strongly, they're using that as their resistance level or their support for the flip side. Okay, so multiple levels of confirmation as well as our pivot points. There's your high, lower high, there's your high, there's a higher low, but then you get another lower high, which kind of shows the strength to that bearish trend. Okay, the chart is always going to tell you where and why you need to take a trade. Okay, you guys should not be trading off of euphoria, like taking puts on big red sticks or calls on big green candles. Okay, that is a completely wrong kind of strategy when trading. Okay, so moving through here, right? Let me pull that back up. I take this 290 put, and then I ladder here on the next shove up. Okay, remember on that tweet, where was it at? Okay, on this tweet here, right, I take the 285 puts at 151. Okay, that's the price set for $1.51, right? These were all called out on stream. You can all watch the VOD from today and check it out. So look, I'm just going to change this contract to 285. Okay, where's 151? Right around this range right there, right? What time is that? 9:56. Okay, so let me write this out, 290 put. And then right here, this push up, 285p. Now, why do I short that? That's the first pullback where I see a buyer stepping in, and I am anticipating that it's going to reject off of this 9 EMA. Now, before I take any trade, I need to have an identified stop loss. Now, in the 1 minute, this is why I really like trading the 1 on very strong trends. And, you know, I got in very early here in hindsight. Okay, this is only less than 30 minutes into the open. Okay, and when we shove down right here, this is the first push, very close to the 9 EMA. We took that at 151. Now, that is called laddering. Okay, also when you're trading, another tip, I do not like trading these 0.5 strikes, right? These 292.5s, 297, right? Sure, you will make money on them, but the open interest is much lower. If we look at here, right? 290, 4,600. 292.5, only 1,500. It's going to be less liquid and less volume, right? It's not going to, you're not having that big interest in where it shoves up. Remember, these contracts, I got out at like 943 or 945, you know, per contract on the 290s, but they went up over like to $10 and like 20 cents, right? So $1,000, right? Look at the 295s, 5,400 open interest there. 297s, only 50, or 297.5s, only 1,500. Okay, I do not like trading these. I will jump out even further out of the money if I have to because of the open interest being so high. Okay, so that's something that not a lot of people talk about, but I have seen, you know, in my kind of experience trading options. Diesel says, any reason why you ladder instead of just adding to your winner? So the contract price gets too high, right? If I can get a full size entry here, Diesel, right, and I enter here 150 and it shoves down, if I add right there at 955 right here, right, those are 185. So sure, you could add to that, but I like to gather the delta along the way. And not really mess with my initial entry too much if I have a very strong entry, right? Because then if I add to that, sure, I'm adding to the contract price, but I also don't know that this is going to dump that hard. any trend on any day, I have no clue how strong it's going to dump or if we're going to have a range or a trend day. This anticipation of me entering here could have turned against me, right? This could have shoved back up and, just reversed, simply due to the fact that, it was still within a major trend, support level. So that's just how I trade. You may have a different approach, and that's completely fine. Brinkle says, how did you know when you entered that put it was a lower high? I could have kept going higher. I know it could have upper wick, but it still doesn't mean it can't go higher. Okay, so you're right. But remember, reading all of the things that are in my favor here, okay? We've rejected off of VWAP. We've rejected off of VWAP again here, right? This is one candle closing, and it instantly closes back below it. My 9 is, supporting me in the downtrend, and, you have an area where you would stop out. Maybe you stop out on the 1 minute 20 EMA, or you stop out up here in this area where it would be the 200 EMA break or a higher high. And if you stop out, right? That's why you don't want to shorten the downtick and then have to stop out all the way up here or up here, right? If I am taking a short right here like I did, if I stop out right there, it's not too bad. Or if I stop out right there, it's not too bad compared to the very low entry down there, okay? So, would that matter on a stock like NVIDIA? What would matter? Yep, Senpai is exactly right. Laddering gives you the repeated ability to take, I'm just collecting the delta along the way, right? And riding into that momentum, taking these cheaper contract stocks, right? I took those at, these were at 202, right? And then, this was at 285. These are at 202, right here, the 290 puts, and the 285, I buy them at around $1.50, right? So there's an area of contract price that I want to be able to buy so that I could scale out along the way. That's something that I also want to talk about, right? When you're selecting your contract, if you're right on your trend and you're strongly confident on your TA, it's okay to trade a little bit further out of the money, but make sure you are watching the open interest and the volume, okay, on the options strike or the options contract, not just the underlying. Because something like Pepsi may go very well, something like Walmart, but you may not have the open interest and the liquidity to either one, size in or scale out appropriately. So, going through here, right? How do I stay into this trade? Okay, this is, I talk about an edge. You guys have to develop a strategy. A lot of traders, they like to, hold on to their losers and cut their winners very quickly. And that's just, a defense mechanism. That's being afraid to hold on to the uncertain and, trust their kind of entry or their technical analysis. So going through here, I have the entries. Okay, that's only one part of the job. The second part of the job is scaling out and moving my stop along the way. So if I go here, right, this is the 1 minute chart. Okay, let's bump it up to the 5. Okay, now we're going to mark our pivot points. This is super basic, but super important, and a lot of people just disregard it. Okay, but candle by candle, we're getting lower highs and lower lows on the strong trend. Okay, there's two phases that happen here. You have a consolidation, right? Some people call it distribution, whatever. It doesn't matter. I don't care about the name. I care about the understanding of price action. Okay, consolidation here, it trends. Okay, now you have another sense of consolidation. We don't know if it's going to continue down or up, but I see that my EMAs are holding here for my downtrend. Okay, but this is the channel, right? But within that channel, we're not getting any higher lows, and we're getting consecutive lower highs, right? Which would add to the bearish trend, right? Lower high, lower high, lower high, and lower high, right? If I draw a trend line there, you can see very clearly it doesn't touch. Okay, if I zoom in a little bit more, it does not touch. So candle by candle, I'm consecutively getting these lower highs, especially within this range, and it breaks, right? Then what happens after this consolidation phase happens? A trend. What happens then? Another consolidation phase, okay? After the consolidation phase chooses, you're seeing that shorts are defending this area very strongly here by all these lower wick or all these upper wicks. No candles closing over 289.17. right there at the body, it trends again. Now this is where it comes into consolidation. This is also taking into account the time and how far of an extension this move is. Okay, going through on the 1 minute, this is really what I watched all day from my perspective. Okay, seeing these ranges and taking in to account my 9 and 20 EMA relationship, right? The health of the trend. Whenever I'm trading the 9 and the 20 EMA, it really tells me how strong of a move is at hand and how strong buyers are coming in or sellers defending their trend. So we can see here, right? 9 EMA respected. Every time it pops up in a strong downtrend, you will see the 9 EMA being absorbed. Okay. There's the 20. Remember the range in between. You don't want to see a cross. Okay, we'll go over when we first see our cross. All right, and a cross doesn't signify a true reversal, but it does start to show the weakness of the short or the opposing side, depending on what trend it's in. Okay, so look, all of these are ads for your short. Remember, you don't want to shorten the downtick. Sure, you can make some money here or there. That's the anomaly. But if you really want to refine and sharpen your edge or your strategy, then trade very precisely. Okay, you don't short red candles. You short when it pops up. That makes the contract or the options premium cheaper for you. Okay, so right there, perfect entry. You're gonna have to wire your brain that way, especially if you're used to, just FOMO buying, right? That's euphoric buying, and it's really not something that is profitable or replicable. Going through here, right? Then we see this low here. Remember our pivots. There's a low. And we're getting consecutive higher lows, okay? Even though that someone may have done this in a micro trend, drawn something like this or whatever. These are poorly drawn, but it doesn't matter, right? Something like that. And then it breaks. Someone, on a smaller time frame would have gotten stopped out, but that's why you look at your 3 and your 5. And the overall strength of this trend is this low of this wick, okay? If we go here on the 5 minute, right? Han Solo in the group today pointed this out. On your larger time frames, that was a scarier wick than some of the other ones, okay? You saw a very strong move up and really no candles closing below this line. It takes an immense amount of buying pressure to come up here and just, hold a bid that strongly, okay? We can see that on the 5 minute. It's much more clear, as well as a downtrend break. Now, I know I was talking about higher or lower highs in a downtrend, but if you're getting lower highs and you're consecutively pushing up higher lows, okay, you can see this right here. Here's your low. Here's your low, right? Another higher low put in and another higher low, right? That means that the bidder is stepping this up and tightening the price action. You can also see your EMAs tightening up as well. It's showing one, this bidder pushing up and seller still pushing down, but noticing the weakness that is at hand, right? I talk about this. It was kind of goofy, but it's like a carrot. When you start to see this cross forming, you can see it very early as the EMAs will start to tighten, and noticing that, hey, yeah, we're getting lower highs. Okay, draw a line there. See, it doesn't touch. Yes, we're getting lower highs, but price is tightening on the bottom side. So those late short sellers cannot, if you're late and not being diligent on understanding or reading price action through your lower highs, right? I mean, someone really basically would have drawn like, a flag, which is exactly what we're looking at. So read the trend, okay? Your 90 and 20 EMAs are tightening up here. You're getting higher lows consecutively. The lower highs are slowing down, and you have a big wedge here. Okay, you see this big line, this big kind of neutral wedge. So something's going to happen. But when we get a breakthrough and then this forms into a higher high, now you have a higher high and a higher low with a 9 crossing over your 20 EMA. Okay, you cannot be late to fighting the trend or flipping sentiment or something, because you will pay, you will pay in capital, right? Because you're not respecting a stop loss, or you're being late to identifying the sentiment flip. Okay, so look at it. Downtrend break, higher high, and the 9 is crossing above the 20. That's 3 confirmations there. Whether you stop out or not in your put, or if you're already in calls, right? This is something that you should be noticing. Okay, this whole interaction right here at the very tip of the wedge that we've drawn is very significant in the fact that this, showed a, a power shift, right? Always asking yourself throughout the day, who's in control? Are buyers in control or are sellers in control? You have to ask that all of the time. Okay, so moving through here. We've gone over channel identification, strike and contract price. We've gone over 9 and 20 EMAs and holding on to our winner. And as well as, okay, so I need to talk about the scaling out, right, a little bit. So if I restore this, if I go to 290, and I get out like, hold on. I get out at like 9.43 or something, $9.43 per contract. Okay, and I think that's right around this apex tip. Yep, right around here at the very base. And what time is that? 11:02. Yeah, right here, or in these candles. Okay, we get out there. Why do I get out there? Okay, we talk about the large buyer stepping in on the 5 minute. Okay, one, and we're starting to see some chop. Okay, this was lower high candle by candle here on the 5 minute, and then I got a higher high, right? So really watching and paying attention to this trend, as well as noticing, on the 1 minute, we started to see some weakness down here. Okay, right. This is where the EMAs were tightening very, coming to a very close point where they could have crossed, as well as that's already happened, 1, 2 times already on the 1 minute. You could possibly count that as 3, but, understanding the kind of range or the trend that has already occurred, right? This extension of this trend, and, not thinking that this can continue on for the rest of the day, right? It could have most likely been a possibility, but across the board, all of the bearish trends, and seeing, like not just on, NVIDIA, but look at AMD. Let's look at the 10 minute, right? At the point of reversal from today, big buyer stepped in. Okay, if I go here on Apple, not sure, I didn't trade Apple very much. Big buyer stepped in around the same time. QQQ, big buyer stepped in, all across the board around 11 o'clock. So it was a great time to lock in profit, as well as the extension of the move, even though you could have maybe shorted some other, good little pops here or there. There was no reason for me to hold on and be greedy. Okay. Let me catch up on the chat a little bit. Yeah, just buy the dip, just reverse it. Am I incorporating key levels on a higher time frame for support resistance, like 30-minute, hourly, daily levels? Yes, I do. If I look here on NVIDIA, or QQQ, excuse me, these are the plans still from this morning, which was crazy, right? Look at how these panned out. Okay, if I go through on the trading floor or watch list, 104 or 0104 pre-market plans today, 8:30 this morning, right? This is the same chart. I said pay close attention to the 5 or 10 minute 200 EMA, right? This orange line. This is the same chart. You guys see this, okay? And we marked this demand zone as well as this demand below, and then the previous day low demand, okay? And knowing that there would be some sense of interactions there, but they could be taken over on a strong bearish trend. Okay, so going through, we can see, right, on this, let's go to the 5. Okay, we can see right off the open, you're testing that orange line, the 200 EMA, okay? And it's no sellers are letting it close above. You can see that, right? All these upper wicks, let me remove this. All these upper wicks here over the 200 EMA, sellers identify and use the 5 minute 200 EMA very often. Okay, if I go back to the 10, okay, where I drew the chart originally in the pre-market, you can see, right, struggling, trying to hold the 200 on the 10, breaks down, holds, or retests and shoves down very strongly. Okay, so That's all from the plans this morning. And we marked these demand zones. And knowing that price would come to these demand zones and possibly test it. But this is a break-in base. There's two opportunities that happens or scenarios that happens in zones. All right, when you're in a zone, it's either going to break and base. So like we've seen here, it breaks through, comes back, retests, bases, and then continues downward or upward, depending if it's a supply zone or not. And there's the other scenario being that it's going to absorb, buyers are going to absorb this selling pressure and start to form, right, a consolidation range or, higher lows, right? We've seen that in this day here, right? Hold on. Had you drawn like a demand zone off the low of this wick, right? Buyers test it all day. They form a tight consolidation range, and eventually they get taken out, stopping out, which adds to the selling pressure, right? But it's either this zone is going to hold or it's going to be broken and based. Okay, so we see the reaction to that zone as well as the reaction to this supply or to this demand on the previous low of day. So we see it breaks and bases there, shoves down, same thing, right? Buyers come here and try to test it once again. Sellers locking in profit at a safe area, right? They know that, hey, buyers are going to use this level to try to base some sense of support. It's not a bad idea to cover or lock some in and possibly reshort for those late shorts, okay? So going through here, right, breaks, bases, noticing the doji candle. Whenever you have a doji candle, you should be marking, the body of the doji like so. Let me just remove the zone. Marking the body of the doji and seeing who's going to win, right? Are sellers strong enough to close below the wick of the doji, and are buyers strong enough to absorb and close over the top wick there? Okay, always when you see a doji like that at a point of, reflection, like a zone or a strong key level, you have to mark that out because it is very kind of strong and significant to the price action and the dialogue of, between bears and bulls. How do you identify a break in base and hold through that big green candle? Okay, so you want to talk about this. This is on the 10-minute, so let's go to 3. Okay, when I go through here, right, that was a big green candle like you talked about, right? But when it came through, let me just delete all this. Right? This is where I was talking about your pivot points in a trend. Whether or not you're using your EMAs or whatever, you have to understand your pivot points. Okay, let me go back on the 10 so that we're all on the same page as to what I'm referring to, right? I'll just draw, a bunch of arrows, okay? This is the green bar he's talking about. Going on the 3-minute. Okay, we can see right there. Now, yes, the EMAs are in our favor, but how do we know? How do we know that it's going to hold, right? You have to have multiple levels of confirmation, of confluence. So if I go through here all day, it's very basic, guys. I mean, this was one of the first lessons in the Patreon that I went over. And, traders, it's one of the most valuable. Okay, lower high, lower low. Okay, another lower high, another lower low because this breaks. So when it comes back and retests, another lower high. Okay, when it shoves down right here, another lower low. All right, shoves down again. There's another lower low. Okay, this comes up, comes to retest. It's a lower high. You see this level right here? This most recent pivot? This is never broken through. If you're a short, okay, where are you going to stop out at? If you're using the 1-minute or 3-minute, whatever 5-minute EMA, you're going to add within this range, maybe on a 9 EMA tap to get in there a little bit earlier to make sure that you get your fill. But you're going to stop out if you close above the 20 EMA or this strong VWAP right here. That aligns with this lower high. That's a strong area to put a stop loss, okay? So when it pops up here, you short. And why? What if you go short and it rips up in front of your face? That's trading, guys. And nothing is ever guaranteed. Nothing is for certain. You can only trade the price action that is at hand, and you have to accept that, hey, loss is a part of trading, but so is winning if I can trade this correctly. Those of you in the Twitch stream today saw me break down multiple plays and without really much, trouble, right? I look at this every day, 9 and 20 EMA with the relationship of the 200 EMA, looking at VWAP, my pivot points, right? All of these lower highs and lower lows, or in an uptrend, a higher high and a higher low, right? If I go here, right, there's your higher high. Okay, there's your higher low. This higher high breaks again. Okay, oh look, another higher low. Okay, this high is broken. I wait for the next high, right? You guys see this. It's very, watch the YouTube video that I put out as well. This will go over your pivot points in a very quick and concise manner. But, when you're charting at night, look at how you can hold on to a trade, not only from your EMAs, but using your pivot points in that trend, because sometimes your EMAs may fail you. Okay, like on the 1 minute. Very common for that to happen because it is the 1 minute, right? How many 1 minute traders got stopped out right there? But on your pivot points, you never got a higher high, okay? A higher high would have had to have shoved up above there, okay, and closed. You never got that. So don't get stuck on your 1 minute. You have to look, if you're trading your EMAs, you have to look at multiple time frames. What's your scaling out look like in that downtrend? Okay, the scaling out. So if you are, let's say that you get a good short entry. Let's say you get this entry here, or let's say you get this entry there or there, right? Those are 9 EMA taps, or maintaining its EMAs, okay? Your EMAs are not going to tell you where to sell. They will tell you the strength of the trend, right? Holding the support, whichever sentiment you're shoving, bullish or bearish, okay? But when you become very far extended and you do get a fresh lower low, right, scale out into momentum. Okay, you see this space here that's been created, pushed off the EMA. That is telling you when it's shoving far off, it's not a bad time to scale in, or scale out, of your position. Now, if your idea to trade, if your plan is to hold on to your 9 and 20 EMAs the entire time, then that's your plan. Okay, but if you're scalping, right, later entries to take quicker profit taking, then, when you are extended from that EMA, then that's when you should be scaling out. When you're done, can I explain psychological levels? So psych levels, right? So your whole dollars practically, and half dollars like a 395. So if I go through here, I want to mark 400. Oh wow, look at that. Look where 400 is, guys. Okay, I just went marked price level 400. Okay, 400. Once it's broken through, it bases. Broken through, bases. Okay, and then when it shoves through very strongly, it retests and does not break again above that 400. The 400 is a major psych level because it's a whole number, and it's it's like if you're trading small caps, like 10, right? 10 was a huge number in small caps. If you broke past 10, you could probably get, to 12 or $13 or something like that, right? But if you break below 10, that's going to be a strong level where shorts or longs will use that as their support, depending on which kind of trend or direction they're trading in. Yeah, they are. This will be uploaded to YouTube as well as Donuts. He uploads them as well. I can upload them to my YouTube channel also. So, just a quick break here, right? If you guys, 1 second. If you guys are learning a lot from this, I do this 3 to 5 times a week. Okay, we're going to continue the lesson after this, but I do this about 3 to 5 times a week, right? I have a very large Google Drive file now of all of the lessons and reviews and strategies that I have gone through the last 4 months in the Patreon, right? Positive performance needed improvements, cautionary measures, trading, trusting your systematic edge, how to buy high and sell higher, okay, psychological think tank group session, 9 and 20 EMA strategy breakdown, my favorite setups and how to trade them, problems traders face trading chop and how to trade through that, how to be paid, so many, right? This goes on for, I think I probably have 70 plus 1 hour almost 2-hour videos in this library. So this refreshes every month, right, for the link. But for those of who have joined into the Patreon, lots of things that we've covered through the past, and things that will help you along your trading journey. Everything that I use, I'm not a very complex, indicator strategy trader, right? I use very simple strategies. And why do I use them? Okay, using very simple strategies like the 9 and the 20, it's not uncommon, but a lot of traders use that. So when I'm trading that, I know that there's a lot of other traders reflecting their trades off of this as well, okay? As well as supply and demand or pivot points, right? Noticing VWAP. Huge institutions like banks and HFTs use VWAP. Okay, the 200 EMA, very strong indicator as well. You guys have heard of the 20 and 200 EMA plenty of times. So, 1 second here. Yeah, so to join, right, this is the Patreon page. I've got 19 spots remaining. I think that caps it right at 400 or something like that. And then after, I think the last day to sign up for the, the beta or the original price is going to be, I think, I'll give it until probably the 16th, that Sunday. And then after that, this tier will be gone. Those members who are a part of this tier will stay at that price and not be affected by the price change of $80 a month. Moving through here, let me catch up on what you guys are talking about. Yeah, the drive is filled with stuff. Can I explain the use of the 200 EMA? Do you just use it to see the relationship with the 9 and the 20? No. The 200 EMA to me is kind of like another form of VWAP, okay? So VWAP is going to follow price very closely, but look at this. Look at the relationship. Hold on. Let me, what is this? QQQ? Yeah. Look at the relationship with the 5-minute EMA. Okay, going through here. Okay, when it breaks below very strongly, that's a strong selling signal, normally on the 5-minute or the 10-minute chart. Okay, you're going to see this in a bearish trend if it strongly breaks through that. Okay, because why? Why is that? When shorts are shorting through this, they're now going to use this as their resistance. So when it pops up here, resistance, right? They short it, they gap it down, and it holds all the way through here until buyers break in base. Right? Buyers break up, they base, right? It holds VWAP, right? Using VWAP and the 200 EMA together, noticing the trend. Your 9 and the 20 really is for kind of day trades if you're looking at a smaller time frame, as well as, gauging the strength of the trend, okay? So we break up, base, and then it shoots up, okay? Now that you see that sellers came here and rejected it, but when it pushed up here, it holds, right? It breaks very far away. Now look at this reaction with the 200 on the 5-minute. Okay, I like the 5 and the 10-minute. On other time frames, I haven't really tested it. This is just what I use every single day. Okay, you shove through here. Probably the 10-minute would have absorbed this, but intraday, I don't really care. I'm going to trade both ways intraday, right? Look at the EMAs on this day. 5-minute chart. Look at the 9. Boom, short entry there, short entry there, short entry there. Oh, 9 EMA crosses over the 20. Look at all the entries for the longs. Boom, they're like giving out free money here, guys. Right? Every 9 EMA tap on the 5. You could have gotten way more entries on the 3 or the 1, I'm sure. Okay, but look at the reaction with the 200. This is what we're talking about. It does break below, but when it comes back up, right? Same thing. Breaks, bases, holds above VWAP here. Large bullish reaction. And then after that, look at the ads, right? Look at the support being held, right? Buyers are using this area, the 200 EMA. Remember, never look at the 200 EMA as a finite line. Look at it as kind of a cloud or a range, okay? Look where buyers are stepping up their bids, okay? Until what happens? 405 is a strong level because it is very close to that all-time high break, and it was a previous level. Okay, if I go here, I'll show you. Right? Look at this doji here. What is that? 405.41. Let's just mark the whole thing. Okay, let's go back to our 5-minute like we were on. Why does price reverse? Okay, there's always a reason, guys. It's not just, you know, magic. I'm not a magician, right? I only read and trade price action. Okay, you guys saw where I just drew that zone off of that doji on the daily. Going through here, 200 EMA holds. Now we're in supply. For us to break through the supply and base, it's going to take a lot. One, because the 408 70 something all-time high is up here, as well as the supply zone, which we've had a lot of struggle with. So watch the reaction to the supply zone. This is where your pivot points are very important, okay, on multiple time frames. This is on the 5. On the 1 hour, it's going to be much more clear. Okay, but there's your high, there's your lower high. Okay, this does not count as a higher high because it's a weak reaction, but that's another lower high. Right, moving through here, lower high. Okay, lower high. You guys see what's going on here, as well as lower lows. We can see each of these lows gets taken out. Look at the trend of the 200 EMA, right? We're kind of just chopping around it, but most of the time is spent being shorted under. Every time it touches it, right, what happens? 200 EMA touch, big shove down. Okay, 200 EMA shove up, big shove down. Okay, and the extended hours, it's a bit different. We spend a little bit of time up here, but we're flagging, and it ends up failing. Right, we've gone through here, but it's also in that supply zone once again. Okay, you see this major daily supply. So I don't just use one strategy. I have to use, my edge is my own style, right? Using all of the strategies, 9 and 20, 200 EMA, VWAP, pivot points, support and resistance, and supply and demand, like I just showed you, right? Gathering all of those to paint a picture and understand the kind of body language being presented through the candles and the dialogue between bears and bulls. Can I talk about what is considered a tap or test, an EMA versus a push through? Like, is there a certain amount of body that needs to close above? Okay. Let me see here. I have to find an example. We may not have had one today. This isn't bad. Okay. So right here, this is the 5-minute chart, but you're starting to see, right, very far extended, but your EMAs are tightening and you're getting some candles closing above this 9 EMA and even pushing above the 20 a little bit. But there's still strong short opportunities, right? If you short here within the range or on the 20, right, they do give you good pushes and you're getting consecutive lower lows, but they're not very strong. Every time you get a lower low, what's happening, guys? Something very significant is happening. Okay, remember that flat line I told you about? That's a big buyer coming in and setting up shop, right? They're not moving at all. So, you know, hold on. Okay, I'm just marking the low of the body right there. Okay, body right there, no candles closing below it. I'm very slightly, but not a strong candle. Okay, look at this low. Yeah, it's a lower low, but buyers are stepping up. Oh, look at this low, right? A big buyer is coming in. When you see a tweezer bottom like that, or a tweezer top or whatever, that's a strong reaction and it's very significant. It's not like, you know, these little tiny wicks or something like that. You know, yeah, you get something like that, but you have to see a candle close strongly below for it to be bearish. And on these consecutive lower lows, you're seeing buyers come in, buyers coming in, buyers coming in. Okay, we understand that. Now, when we see this happen, remember we talk about this carrot look, right? But also, a candle is now closing very strongly within the EMAs, and this candle right there closes strongly above. Now, you could have probably gotten out a little bit sooner, maybe on the 1 minute or the 3 minute, but this would be a good example of a short who's possibly a little bit late to understanding the price action at hand, or something like that, or if they're just strictly trading based off EMAs. Now, I am always marking my pivots or understanding, you know, the higher highs, higher lows, lower highs, and lower lows in a trend, and getting my thesis much more sooner, right? Just like we did on NVIDIA today, right? How many people, you know, were calling out NVIDIA shorts, you know, up around this area, right? Maybe down here or later in the day, but right off the open before 30 minutes, right? I'm reading price action very closely, and I want to go over why I was able to get that entry. So up here, always, guys, remember, what are the two phases? Consolidation, range. Consolidation, range. So if I see us consolidating, I know that there's two sides to fight between. I'm going to mark this 1 minute upper wick. I'm going to mark this 1 minute lower wick. If you are buying, in the wrong direction, like if you're buying up, like a call up here near the short kind of defending area, you're going to get smacked. And a lot of people probably did, who weren't paying attention to that. So, but noticing the strength, okay, alongside the EMAs, we have went over all of that, but seeing, hey, a big short comes in, steps in right there. He steps in right there as well. Buyers step in, but they get taken out a little bit lower, and then we actually are closing inverted hammer candles into the zone. See these 1 minute inverted hammer candles, and then closing below. Okay, that is telling you a lot of information in not a lot of time, and you have to be able to understand, one, the pivot points, two, your EMAs, and your indicator, your VWAP here, as well as, your supply and demand, okay? Gathering all of that, as well as the information that we talked about on NASDAQ right here, noticing all of the EMAs, same thing, right? As well as, this range that we have, right? There is that support high, or support low, and that resistance high, right? Or the those high of those doji wicks. And look right here, I'm going to zoom in a little bit on this. We're looking over here in the top, or not top, but the middle left of the screen. Remember, when we get a doji on a shove down or shove up, you need to draw a zone on the body, okay? And you see this next 5 minute candle, very indecisive. Buyers and sellers out of balance, still making up their minds on where this is going to shove. But as soon as we get that first candle closing below into where buyers stepped in, that's showing that buyers are stopping out and that sellers are coming in very strongly. As soon as we got that candle from that doji, I mean, look at, we already know, right? This big bearish trend that occurred. Okay. 290p QQQ, what was my risk? I went over this already, but if a candle closed over VWAP here or broke through this 200 EMA or making a higher high, right? Remember, I scale in. I don't go all big one position at a time. Should we always wait for confirmation candle after seeing an inverted hammer? You don't always have to. It's better to, but you may get a little bit of a later entry. Okay, so where are we at now? About an hour. Okay. I've covered a lot of this, finding your own strategy and edge, as well as using EMAs and trend lines together, and trading psychology. This is the last point, and then I'm going to wrap it up. So going through here, trading psychology, understanding that on a day like today, right, big money on the downside, big money on the upside. There are days in the market where they literally just are passing out money, right? Everyone, if you went on Twitter today and went to all of your, favorite people you follow, whatever else, everyone made money, right? Everyone, 100% here, 200% there, right? Everyone made money. So what does that tell you? If everyone made money and everyone felt like it was on easy mode today, that you should be cautious going into tomorrow. Now, it's not saying or invoking any fear, but it's, coming to the market with a clean slate without any bias and being able to attack and trade any kind of formation, whether it's a trend day or a range day. The biggest losses come after people's winning streaks. Maybe they took a lot of wins in the day and they felt confident, and then the following couple of days they lose everything they've gained and more, right? They have seen people take huge losses after being confident in their trading. And that becoming, that euphoric kind of overzealous overconfidence, that's what kills you guys, right? Because then you feel like, I'm taking 2 steps forward and 5 steps back. Then you feel like you're never going to progress. You're going to weaken your kind of mental state, and you're not going to look at trading in the same kind of light. So really, the payday, this is what I call a payday, but the payday overconfidence, you have to take note of that, right? If you, like myself, I was, very, very nice win today, going into tomorrow off the open, I'm sizing down. I'm just going to trade maybe a quarter or a half size until I see a trend truly developed. And, that's being noted by my EMAs or pivot points or something like that. And when that does happen, then I will be able to be a little bit more confident trading alongside those bigger participants in the market. As well as, that fresh slate kind of mindset. Each morning when I fire up the stream for pre-market prep, and picking out contracts and, going over the general kind of health of the market and stuff, there's a lot of uncertainty, right? There's a lot of people that, are looking to me to make good calls and accurate calls and delve through the market. And we do every single day, but there's a lot of uncertainty because I don't know what's going to happen. We could have a kind of very choppy range day, like the last 2 days have kind of been, or we can have a very strong trend day. And the idea is that we only need to survive on chop days, taking quicker profits or scalping, and make sure that we're present on the days that it's trending very strongly. These are paydays. They literally are handing out money, okay? As well as no oversizing. No, a lot of people talk about this, but if you've had a few days, I've heard people talk about, if you're going to take any trade, you need to full size it, right? Go full port, or why take a trade if you're not fully confident? There's no such thing as a full confidence trade, right? I used to ask that all of the time starting out. I was talking to, I don't know, you guys may not know him, but his name was like Cool Boy, right? In Atlas Momo team a long time ago. And I was like, hey, how do you have confidence going into a trade that it's going to work out, right? So that you feel like there's generally no risk. And there's not any trade like that. He straight up told me, he was like, in trading, there is that implied kind of risk, but you have to align yourself with the lowest risk entry that you possibly could have, okay? As well as, understanding systematic probability. So, that really ties into accepting risk and accepting loss. I know that going through a trade, there's a chance maybe 60-40 or 50-50 at times, whether it's going to work out. Like we talked about, the symmetrical triangle, these can kind of go either way because there's a series of lower highs and higher lows, but paying attention through VPA and maybe even like a larger time frame, right? Like the 15-minute today, showed, look at this 15-minute. This was a huge demand zone, spending a lot of time out of the demand zone and buyers absorbing, all marked through that lower wick. So I want you guys to continue to be patient. A lot of you guys in the Patreon, the Discord have been doing great. Like we talked about, going through profits and percents today. You guys handled the market very, very well, right? And understood, what your kind of edge was. And I asked you at the end of the day, what kind of strategy or tool did you use to allow yourself to understand and trade the price action, read the price action very well. And you guys are paying attention to the lessons. You guys are being patient. You're not, some of you guys are struggling, shorting the upticks and going long on the downticks. It'll come through time, but it's something that you should be reviewing at night. So, I'm going to wrap it up here. Remember the Patreon, I think if I go through here, I think there's only, 18 spots left. So, and then that'll run for a couple more weeks here, and then we'll lock it up. So, but if you guys enjoyed this session, I'll put a link to the YouTube channel, or you can go to my Twitter account, and the YouTube channel will have the pivot points video that I just posted. I do recommend watching that so you can kind of get a better understanding of how I use pivot points in tandem with the 9 and 20 EMA in kind of a shorter video. But once again, thank you guys to everyone who has tuned in, and I will see everyone in the Patreon about 8:15 in the morning, 8:20 or so, and we'll start the pre-market prep and going through contracts and everything. So thank you to everyone who tuned in. Make sure you guys get some rest. Please hydrate as well. Very important. Drink water, okay? And I'll catch you guys all in the morning. You guys take it easy and have a good night.